Greetings guys, Joseph James here once again with your nightly newsletter brought to you by theschooloftrade.com. Today was September 21st, 2009. Hope you guys had a great weekend. Back in the action here again Monday morning. Now before we talk about the live trades we took today in the room, I want to remind you guys we have a free resource online. Check out our YouTube page /School of Trade. And while you're there guys, subscribe to our channel and please rate and comment on this video. Let's talk about our trade room totals today. Now we brought in 40 bucks here in the market today. We gave back a little bit towards the end of the morning here and I'll go over that with you guys a little bit later on in this video. Weekly total here, of course, going to be 40 bucks for the week. Now we're coming off a pretty decent week before that. As you guys can see here, made 1,100 bucks last week in a very short week. Of course, the trade room was closed on Friday for the U.S. session. And week before that, of course, you guys can see here 210, 600, 1,100. So we're working our way back up to our normal tricks again, getting back up into that 500 to 700 bucks a day here in the room. So keep in touch as we work our way through the month of September. We'll bring you guys up to date on our trade room totals. Now, the term of the day today is follow-through. Follow-through. Now, what exactly does this mean? Obviously, this term can mean a lot of different things for a lot of different people. But for day traders, specifically James Wave traders here in our live trade room, this is a term used to describe a movement in price that continues off increased participation by traders in the direction of your trade. Well, wait, what? What was that? Let's see. Follow-through. It's a term used to describe a movement in price. Right? So when price moves, and it continues on increased participation. So follow through means that price is going to continue moving in the same direction on higher volume, increased speed of the tape, and ultimately is going to confirm this move, whether it be to the upside or the downside, based upon, again, increased speed, more volume, and that follow through. You'll hear me say things like, I need to see follow through on this move to enter the market. Right? Or this breakout lacked the follow-through we needed to feel confident in entering the market. Now, follow-through was a really important term today in our room because what you're going to see here later on in the video is that we actually saw this follow-through on the crude this morning start to deteriorate every minute of the day as we got later in the morning. So it became a definite term we want to be familiar with tomorrow, so make sure you guys come out and join us. Now, let's say, for example, guys, on this slide here, that this red line is an overhead level of resistance. Now, these red lines, of course, we locate them all the time on our charts. They're done automatically using our proprietary indicators. Now, this red line, of course, being an overhead level of resistance, the green line, of course, that could be considered to be a candlestick or price action. So what we're seeing here is price will come up and test this level of resistance and begin to pull back from that high. Now, what we're looking for here is that the buyers should be entering the market 1 to 2 ticks above that swing high. So as we look to break through that level of resistance, the first 1 to 2 ticks, right? And once we get through those first 2 ticks, then price explodes there to the upside, right? So once again, going back here, those first 1 to 2 ticks are just the first, couple ticks of noise around this potential level of resistance here. What we're looking for is to see price explode through that level. In other words, not just those first 1 to 2 ticks. I want to see 3, 4, and then of course a lot more ticks here above that level of resistance. We see, of course, the rookies jump in. We see the more seasoned institutional traders jump in. Of course, that gives us that confirmation of this move here to the upside. If we don't see follow through, what's going to happen is we'll still see those 1 to 2 ticks, right? That's all the rookies in the market jumping in early. It's all the buy stops, right, being triggered there left and right. But what happens when we don't see follow through is that we lose momentum quickly and we begin to see this up and down sideways W or M pattern there right above that level. And what that tells us is there's some sort of fist fight going on between the buyers and the sellers arguing over who's going to have control over price here. Now this is very important because if the buyers had full control, we would literally be watching this price again, right, explode right at the top after we saw those first 1, 2, maybe 3 ticks of noise around that red area. But in this situation, we don't see that explosion. In other words, there's no follow-through. Well, without follow-through, it's exactly the opposite. We don't see that speed of the tape. We don't see that momentum start to build as price breaks those 1 or 2 ticks above this red resistance level here. And what happens is it begins to consolidate, and then, of course, the sellers will then grab it and bring it right back down. Those sellers are quickly going to see that the buyers are not controlling this price. If we didn't see that follow through break above that red level of resistance here, the sellers will grab it, bring it right back down, and then we look for our two-step, right? A trend reversal pattern called our two-step setup. Okay, so once again, follow through. It determines if the move will continue, so it confirms our entries. And of course, we look for follow through three different ways. Speed of the tape, looking at the buyers versus the sellers, right? Are the buyers being sopped up by the sellers, or are the buyers having the ability to blow that price right through the upside? Also, look at the size of the orders. Are we seeing a lot larger sizes at those levels of resistance? So follow through again determines if the move will continue, it confirms our entries, and we use very simple techniques such as reading our time and sales window, speed of the tape, buys versus sells, and the size of the orders. That all will confirm that follow through. And of course, guys, we go over follow through all the time in our live trade rooms. Come out and join us tomorrow morning at 2:45. Guys, the beginner's course is probably the best investment in your free 3-week trial you can make. So grab a copy of the beginner's course and come out and join us tomorrow morning. Let's look at some of the trades we took today. Now, our first trade this morning, nice big winner here, 12 ticks on the crude. First trade here, 907, two-step long, 83. 69.83 is our fill here. We took 2 off at 4 ticks, 2 off manually at our second contract, at our second target. And we took, of course, another off for our runner at additional 2 ticks. Add them all up, 8 plus 2 is 10, plus 2 is 12. That brings 120 or 12 ticks into our trade account here this morning for our first trade of the day. Now, this, of course, happened after we saw a break above that recent swing high. And keep in mind, guys, the red lines on here are automatically drawn on my charts. I don't need to do any of this by hand. All of it's done automatically for me. I simply have to know how to follow my rules, enter, and manage my trades. So we picked up some good profit here on our first trade of the day. But boy, it was pretty much all downhill from there. Because at 9:45, here was our next trade here in the crude. We'll zoom in for you guys, upper right-hand corner. This is what appeared to be almost a guaranteed winner here. 9:46, a breaker long here. Now, entry here was at 28, had to get above that most recent swing high. You can see they're marked right there in your charts with that blue line and that red arrow down. Looking for a long trade, so trading with the trend here. We had to take an early exit in this one because what we saw was pattern developed, nice steady speed of the tape, got into the trade, and then what happened? Nothing. Momentum curled against us. Price action slowed down, and as you can see here, we barely got out of this one before it ended up taking our whole head off here, taking back the money that we made in our first trade. So early exit here, of course, following our rules. Our rules tell us exactly when to get in and when to get out. So simply follow your rules, and of course, as a lifetime member, you'll be able to have those rules tell you exactly when to get out so you can cut your losses early just like this. But this is a great example of how no follow-through on this last trade. And we had to see follow-through when we didn't see it. When we didn't see that big explosion, I knew right away, had made a bad decision, got out of this trade early, and saved us some hard-earned profit. Now our next trade, another example here on the crude. Now this one just after 10 o'clock this morning, so at 10:12, again on the crude, here was another breaker short, a trend continuation pattern. This again was a decent looking trade. We had to take an early exit in this one again because we saw a momentum curl. We went, of course, from green down to yellow, down to red, paste of the tape, which means that our price action slowed down to a crawl. And as you guys know, we have specific rules that tell us exactly what to do to get in and what to do to get out. And this example, a great example here of how no follow-through. We didn't see that big explosion to the downside. We knew without follow-through that we really had a much higher risk trade than we thought we did at first, which means we had to get out of this thing early. Got out early, but of course it cost me a little bit of money here. We took a -2 stop on this one, of course, times 4 contracts. It's going to give you $80 or 8 ticks there, 4 times 2. So we lost 8 ticks there, gave a little bit of money back. Now at this point in the market, we were really looking at this going, okay, we've seen fewer and fewer people in the market as we go later in the day. Less follow through as we've seen, and you guys have seen that, right? Our first trade was a winner, second trade was a scratch, third trade was a loss. Okay, so we started seeing this lack of follow through really start telling us a story. And that really ended up being the last trade we took this morning. We ended up our day at 40 bucks up, and pretty much what we saw was that follow through continued to be missing throughout the rest of the morning. Now, before we go any further, guys, I want to show you another example here on the gold market. Now, this is a great example again of how we can use our pace of the tape indicator to define entry opportunities and when we want to avoid certain opportunities. This was a breaker long on the gold market, trying to get in here above 1001.1, but we avoided this trade strictly because we saw our pace of the tape indicator start decreasing, right, very steadily in the speed of the tape. Now, if you don't know how to read the tape, don't worry. We have you covered, guys, your pace of the tape indicator. It gives me a definite, well-defined picture of when the price action is slowing down. So I avoided this trade, and as you can see, guys, it saved us a bunch of money there to the long side. Right? Would have come right back down and stopped us out. Once again, we use proprietary indicators to keep us out of the trades that we shouldn't be in. Want to remind you guys, our room opens up tomorrow morning at 2:45 a.m., so come out and join us. The beginner's course is always recommended. Now, tomorrow's Tuesday, so we have a free webinar at 11:30 a.m. Eastern Standard Time. Guys, drop us an email, sales@schooloftrade.com for more information about lifetime membership. My name is Joseph James. Hope the video helps. See you guys next time.